Good afternoon, everybody. So the first thing that I've done is I've changed the topic of the speech or the panel discussion from capital markets to ownership models, de-risking and scaling hospitality investment in Africa. It's very long and very complicated. So I'm going to ask gentlemen this question. Capital is not scared, it's lazy. That's where we're going. Hamza Faruqi, let me start with you. Africa is often described as high potential risk. We know that. We've heard discourse to that effect this morning. What, in your opinion, as a hotel developer, is the most misunderstood risk in hospitality investment on the continent right now? Let's get to it.
So first instance, Bismillah ar-Rahman ar-Rahim. First instance, Jeremy, we're sitting in our sort of third, fourth FHS, talking about Africa, but look at this room, look where we are. Needle hasn't really moved much, right? We're still talking about perception. We're still talking about how do we get it going, and the rest of the world continues to thrive. Go look at the American, European markets, hugely institutional, liquid markets, and let's for a second isolate where the world is today geopolitically. This continent, with everything that it has, continues to be optional choice, begging bowl, can do, deeply fragmented. And the problem isn't fundamentally in the continent. You know where the problem is? It's actually in the boardroom with the spreadsheet, it's actually in the execution, it's actually in the underwrite. Because people are still doing things in half-hearted, fragmented, not understanding operator capability. And what do I mean by that? Very simple. The wealthy owner who's put his money in to build a hotel, he thinks the brand is going to solve it. The bank who's actually lending it money thinks it's a brand, they're going to solve it. But no one is solving for the operator-led capability. No one is solving for the underwrite capability. And the moment that goes wrong, everything goes wrong. The problem is not in Africa. The problem is actually starting there. Backing the right jockeys, operator-led credibility, and until Africa doesn't get that right, or at least get the noise of that right, we'll be sitting here in another 5 years going through the same conference, the same part, and not addressing the number of the issue. That needs to change.
So, Richard, if you accept that premise then, and you might not, because Hamza effectively has accused this entire room of either being scared, lazy, or incompetent, are we pricing Africa risk correctly, or do you think we're systematically overpricing it and missing some of those opportunities that he suggests are there for the taking?
No, thanks, Jeremy. I think we need to look at Africa not as one country, but as unique 54, 55 countries.
That's the problem, to interrupt, with global investors often, is that they see this homogeneous form, don't they?
Exactly. And each country is unique, not just unique in its culture, but also unique in its regulatory regime, which is one of the key challenges that we see at Afreximbank, especially when we are bringing on board capital to some of the least developed countries. And therefore, it's a perception risk. It's not an actual risk. We need to decode the data. We need to do and bring on board bankable projects, bankable transactions. And at Afreximbank, we've put aside about $1 billion to support this through our project preparation financing mechanism, where entrepreneurs can come, work with us, and we work with them and bring on board feasibility studies that are bankable, not just for Afreximbank, but for the general investing public.
What's your understanding, to interrupt, of bankable? What does that mean? And how do you convince those investors then that the project that you're bringing to the table is actually worth putting some money in?
Yeah, so who is the investor? We need to understand that. What are their needs? Are they private equity? Are they DFI community? Are they commercial banks? Each of them has different terms and conditions, have different appetite levels towards risk and towards deployment of capital. So once you understand that and understand what are their key driving and rational mechanisms, then you'll be able to address it. And this is precisely what we do at our project preparation financing desk. I think the second item I needed to mention on is the need to decode the data around geopolitics and currency. Because I think these are the two major risks that at Afreximbank at least we are able to take on board, but other investors are not able to either mitigate or pass them over to the relevant people who are able to bear that risk. Using our preferred creditor status, we're able to overcome the geopolitical risk in most of the investments that we do. And we have examples of this. In the last 35 years of our existence, we've deployed more than $1.5 billion, bringing on board more than 2,700 keys and more than 1 million bed nights in Africa. Right now, we are deploying our funds also to the Caribbean, and therefore bringing the linkage between what we call the global Africa, the African continent and the Caribbean.
So Hamza Faruqi, let's do a capital markets reality check then. If the issue, as you're suggesting, if I've heard you correctly, is not access to capital, the money is there, is it the structure of the deal then that simply doesn't meet investor expectation?
I think it's not about the structure, it's about the sponsor, the operator, it's about the capability. If you aren't going to build and provide the focus there, the challenge is this: no one wants to take ownership. Brands believe asset-light, brand-led, they're not going to solve anything. If you look at how they find demand today, half of their demand is coming from OTAs, but then you end up paying 15% for that. So what do? They earn management fees, they succeed. How does that model work? So there's a problem there. Then who else is left? The white label operators, well, they're in today, they're out tomorrow. The problem is this fragmentation which sits in this continent. You need an operator-focused basis where capability and capital is very strongly aligned. So it's not a source of capital issue. I don't think there's a risk issue. I think we've given Africa a very bad perception. It's about aligning capital and capability. If you aren't going to have an underwrite case which understands how am I going to turn this business around, how am I going to make it happen, well, the needle isn't going to move. So it's not about what comes first. I think it's about building a capability focused. Hospitality and running hotels is a very operationally intense business. It's a business which requires granularity. So if you aren't going to understand that, if you aren't going to sit where do margins sit? If you're only going to drink the Kool-Aid of a brand who's going to say, spend this capex, it's a lifestyle hotel, and that's going to give you margins, how is a lifestyle hotel going to give you margin? It's just a better F&B offering. If you don't understand vibe versus margin, if you aren't going to get to that level of granularity, then you have a fundamental problem. Africa, I don't think, has gotten to the case of understanding that level of granularity and intentionality in the sector.
So give us the primer or the blueprint then, Hamza. How do you optimally align capital and capability? Where do you start?
So first, understand what you're trying to solve for. First, understand that if you are an owner or a capital provider, whether you're still seeking capital, what is it that you're looking for? Figure out where your capability is going to come from. Figure out what the capital stack looks like. Figure out what is the best source of capital. Figure out where and what you're trying to do. And also, if you can, try and solve for how am I going to get proprietary demand generation? How am I going to get scale? Because if you're going to expect somebody else to do it and pass the buck, it's not going to get done. And that's the problem with Africa, right? We just keep on passing the buck down. We expect somebody else is going to solve the problem. Well, guess what? Everyone hopes Santa Claus is around the corner. It doesn't work. Sponsors need to take charge of their destiny and take the lead and really understand that the continent has the opportunity. But if you don't focus on real execution capability, well, you'll still be talking.
So Richard, let's bring it in-house then. Are local capital markets, African capital markets, deep enough, in your opinion, to support hospitality growth, or are we, for the short to medium term, still going to be reliant on offshore funding?
I mean, reality check. Our capital markets are developing.
But not fast enough.
I think the pace of innovation within the local capital markets and domestic capital mobilization is moving faster than the regulation, and that becomes an impediment. So we need to bring on board the regulators, especially the Capital Markets Authority in various jurisdictions, to allow A, for innovation, and B, to allow for flexibility on what can be done and within what parameters. Look, for example, real estate investment trusts. How many countries within Africa do we have rates? How many countries can deploy rates comfortably? I think that is where the real discussion should be going, bringing on board innovation at pace with regulation. That's number one. Number two, yes, we'll continue being reliant on offshore funding, but the development finance institutions are also playing a critical gap in, are playing a critical role in bringing the gap to a very low level. We deploy our financing, we are innovative, we bring on board hybrid type models that will help complement what the local commercial banks are doing within the various jurisdictions. We need to move further, which is what we are doing in some of the markets where we operate in, by bringing on board the local capital, for example, with the pension companies. Where do they see the biggest risk, and how can we help them catalyze their funds into real asset development? Is it the first loss guarantee which we offer to them? Is it that they do not want to take on project implementation risk, and through our capability, through, again, our guarantees, we are able to deploy our guarantees and therefore catalyze that investment. I think number three is also about the regulation within the various jurisdictions. Be it in the least developed markets, let me not call them least developed markets, but let's talk about capital mature markets. If you look within the south, Egypt, probably Morocco, very well developed. If you look within the west, probably Nigeria, relatively well developed. Right. Within East Africa, Kenya. But how can we help the local capital, either the equity sponsors, the private equity people, or the individual people within those markets, bring on board that capital? I think that's where the real discussion should be.
Hamza, please feel free to add to that, but maybe against a backdrop of what your business does. Do you think that traditional hotel ownership models are still fit for purpose in Africa, or do you think we need something fundamentally different?
So for me, it's not about the ownership model which is broken, right? Because I think fundamentally that sits where the owner sits, management agreements, franchise, and I think too much time and attention is given there. That doesn't trouble me. But I think what troubles me, again, is not even the lack of development of capital markets. If you're going to wait for government to change policy, make a REIT framework, get it done, it's not going to happen. Again, if you are an entrepreneur, you're not going to wait for policy to come. Anyone who waited for policy to come is never going to get anything done. That's my view. That's how Africa works. So if you're going to sit and wait, it's not going to come. We can carry on talking. But Africa also need to, again, understand the second part on global capital, which is a previous question you asked. Global capital becomes very relevant in Africa for a very simple reason. Because if you look at where the profile of African travelers is going to be, these African travelers are going to be the customers of the future in the Middle East, in Asia, in Europe. If you see the propensity of African travelers traveling out of Africa, so it's not just only building my hotel and making my local system work, right? That, by the way, I think governments have also missed the boat because everything is seen with a tourism lens. But the moment they start understanding, and the biggest example, Jeremy, of that is today. When this geopolitical crisis happened and the GCC carriers shut down, who was the biggest winner? It was the African carriers. And that tells you, if Africans start positioning themselves super smartly, if they start understanding the flow of demand corridor, then Africa is not just going to be a case, give me money for one hotel and bring global capital. It will be the recipient of global capital at scale, at an institutional level. But we need to start thinking in that fashion. We need to start understanding where that demand flow corridor sits. And I think Africa needs to see itself in that vantage point. It needs to see execution with that level of intentionality. And collectively, I think there will be a significant move and change with where this continent is seen from.
So Hamza, if we're sitting here next year or the year after having the same conversation, what would we have failed to fix, do you think?
I think it's conviction and it's execution. Lack of conviction on sponsors, jockey people. And again, I don't want to personalize it, right? But I've gone through a journey which has been painful and challenging. One of the things I'm hoping is, over the next couple of years is that for new entrepreneurs to come in, that journey is not as painful. Because if you aren't going to change and make the conviction call on people, and that applies for the whole ecosystem, you won't find new entrances. This industry is already finding it hard to attract people and new talent. If we aren't going to allow new entrants to come in, if we don't create change in that system, you're not going to create competition, you're not going to create innovation. And I think that needs to change. The outlook needs to change. Who we make the conviction calls on, that needs to change.
So, Richard, if you had to deploy $100 million into African hospitality tomorrow, where would you put it and what structure would you use?
Good question, Jeremy. I think I'd be more inclined towards looking at the trade corridors within Africa. Whether in the West, the Abidjan-Lagos corridor, within East Africa, the Northern corridor, Mombasa all the way to Kigali, Burundi, and probably within the Southern African market, the Nakala-Lobito corridor. I'll be more inclined again towards a PPP type model to bring on board the key stakeholders within an investment value chain, the public sector, the private sector, as well as ourselves, the DFI community. Thank you.
Hamza Faruqi, $100 million.
So, very simple thing, and it's not me being patriotic to the country where I come from. If you look at the continent today, South Africa is the most evolved, developed, liquid, institutional, strong demand base. And again, the rest of Africa needs to understand this is not South Africa trying to be dominant or arrogant. There's two things here. I believe South Africa is going to be that engine of growth, but South Africa also needs to open itself up and start seeing itself as African. South Africa also needs to start seeing that its economies are going to change when it's open its borders to the rest of Africa. But I believe the most liquid, the most institutional market is the place to start, but it has to have an African look and feel and intentionality. And when you do that, and when you make that happen, and if everyone can play in the sand in the right way, beyond just a couple of borders, then I think we have a great African story.
Gentlemen, thank you very much indeed. Tami, I know you get very anxious about time, so I'm not sure if you're in the room, but we have brought it in exactly on time. Are we good? Okay. Gentlemen, thank you very much indeed.
Thank you very much.
Thank you very much. Thank you.